In the summer of 1925, a man named Royce Alderman Whitfield was dying in a private room at Georgetown University Hospital. He had served as a senior administrator inside the Bureau of Internal Revenue for 11 years. He had outlasted 4 commissioners above him, survived 2 congressional investigations, and navigated the single most consequential bureaucratic restructuring in American financial history. He had done all of this quietly, without fanfare, without so much as a mention in the congressional record beyond routine budget approvals. But in the final weeks of his life, Whitfield did something that none of his colleagues ever did. He wrote a letter, not to his family, not to his doctor, not to his priest. He wrote it to a historian at Columbia University named Gerald Foss, who had been quietly assembling a private archive on the internal workings of the federal revenue apparatus since 1919. The letter was 41 pages, handwritten in a cramped... I have to pause here for a second. Because what I just described, that is one case from a much larger pattern. There are 35 documented cases in a document I put together. Different cities, different decades, different types of evidence. Every single one follows the same sequence: discovered, documented, acquired, disappeared. I could not fit all of it into a video. It's in the pinned comment below. Find it before we continue. It covered in exhaustive and sometimes rambling detail what Whitfield described as the single greatest deception ever perpetrated on the American public through administrative procedure rather than legislation. He was talking about the 1913 Audit Manual, and he was talking about why he refused to sign it. If you have never heard of Royce Alderman Whitfield, that is not an accident. The story of what happened inside the Bureau of Internal Revenue in the months following ratification of the 16th Amendment has been compressed, in most accounts, into a clean institutional narrative. Congress passed the income tax. The Bureau implemented it. Life went on. What Whitfield's letter describes is something considerably messier than that, and considerably more interesting. If you want to understand how the American tax system was actually built, not how it was sold to the public, not how it appears in civics textbooks, but how the internal machinery was assembled in those frantic months of 1913, stay with this. What happened inside that bureau, in those rooms with those men, tells you something about power that the official record was never designed to reveal. Before we go further, if this is the kind of history that does not make it into textbooks but absolutely should, subscribe. New documentary every week. Now let us go back to 1913. Royce Alderman Whitfield was born in 1871 in Fredericksburg, Virginia, the second son of a county assessor. His father, Leonard Whitfield, spent 30 years evaluating the taxable value of land, livestock, and personal property for Frederick County. The work required mathematical precision, social discretion, and genuine tolerance for being widely disliked. He passed the temperament, if not the talent for popularity, to his son. Royce attended the College of William and Mary on a partial scholarship, graduated with a degree in classical economics in 1893, and spent the following decade in positions that gave him a comprehensive view of American fiscal administration. He worked briefly as an actuary for a Philadelphia insurance firm. He spent 3 years as a revenue examiner for the Commonwealth of Virginia. He consulted with the Treasury Department on a project related to tariff schedules that was shelved when Congress changed direction on trade policy. By the time he joined the Bureau of Internal Revenue in 1902, he was 31 years old, already partially grey, and possessed of what his colleagues would later describe as an almost pathological commitment to procedural correctness. He was not, by any account, an ideologue. He came because he was good at the work and because he believed, in the straightforward way that many men of his generation believed, that the federal government's administrative apparatus was one of the more important things a capable person could spend his life building correctly. He had seen, in his years in state revenue administration, how badly constructed procedures could distort outcomes, how ambiguous language in assessment guidelines could be systematically exploited, and how the gap between what a law said and what its implementing rules actually produced could be enormous. This belief in procedural correctness would eventually put him in direct conflict with the men who assembled the 1913 Audit Manual. But that was still more than a decade away when Whitfield arrived at the Bureau's offices on Pennsylvania Avenue in the autumn of 1902, carrying a leather briefcase and a reputation for being hard to ignore. The Rise, Whitfield inside the Bureau, 1902 to 1912. The Bureau of Internal Revenue before the 16th Amendment was a relatively modest operation. Before ratification in February of 1913, the federal government had been funding itself primarily through tariffs and excise taxes. The Bureau's staff was small and its internal procedures were, in Whitfield's assessment, adequate for what they were being asked to do. Whitfield rose steadily through that organization across the first decade of the century. He was promoted to Section Chief of Revenue Examination in 1905 and elevated to Deputy Director of Administrative Procedure in 1908, a position that reflected the Bureau's awareness that its internal processes were not well documented. In that role, Whitfield became something close to the Bureau's institutional memory. He knew where the procedural bodies were buried, which guidelines conflicted with which statutes, and where the language of existing administrative rules had been stretched beyond what the originating legislation had actually authorized. He was also, by this point, deeply skeptical of what was coming. He was not opposed to the income tax concept on philosophical grounds. What he was concerned about was the implementation question, the question of how an income tax would actually be administered, and what guidelines would govern the Bureau's auditors. He raised this concern in internal memoranda between 1908 and 1912. Read in sequence, they tell a consistent story. Whitfield was worried that political pressure to demonstrate the income tax's functionality quickly would lead to procedural shortcuts, that audit guidelines developed in haste would embed interpretive ambiguities that would take decades to unravel, and that the people most likely to benefit from those ambiguities were not small wage earners but the large financial and industrial interests that had the legal sophistication to navigate whatever interpretive grey areas the rushed guidelines created. In a memorandum dated November 1910, addressed to his direct superior, a man named Calvin Hartwell Price, Whitfield wrote the following: "The audit framework we are likely to inherit will be written by men whose primary professional relationships are with the institutions most affected by its terms. This is not a conspiracy. It is simply an inevitability of how expertise concentrates. The consequence will be a set of implementing rules that functions very differently in practice for a factory worker in Pittsburgh than for a holding company in Manhattan, even where the nominal tax rate applied to their income is identical." Price apparently did not respond. The archive contains no reply. The 16th Amendment was ratified on February 3, 1913. The Revenue Act of 1913, which established the actual income tax mechanism, was signed into law on October 3 of that same year. The 8 months between those two dates was the window in which the Bureau of Internal Revenue had to construct the implementing administrative framework, the audit procedures, the examination guidelines, the rules that would govern how Bureau agents evaluated whether a taxpayer's reported income was accurate. The document that emerged was formally titled the Bureau of Internal Revenue Administrative Examination Guidelines and Audit Procedures, 1913. Everyone inside the Bureau called it the Audit Manual. It ran to approximately 340 pages, organized into 12 sections covering different categories of taxpayer and income. It established the procedures by which Bureau agents would examine returns, the evidentiary standards required to challenge a taxpayer's reported figures, the hierarchy of authority governing agent decisions, and the appeal mechanisms available to taxpayers who disputed those findings. In the broad strokes, it was a functional document, but Whitfield's objection was not to the broad strokes. It was to 3 provisions buried in Section 7, covering the treatment of business income and investment returns, and to 1 provision in Section 9, covering the valuation of assets held through corporate intermediary structures. These 4 provisions, taken together, created what Whitfield would later describe as a structured ambiguity. They did not explicitly exempt large corporate income from examination. What they did, in Whitfield's reading, was establish evidentiary and procedural requirements for challenging a corporation's reported deductions that were, in practical terms, nearly impossible for bureau agents to satisfy without the kind of sustained legal and accounting resources that the bureau did not have and was not funded to acquire. In simpler terms, the rules for auditing a factory worker's income tax return were clear and enforceable. The rules for auditing the complex financial structures through which large industrial and financial interests reported their income were written in language that created enormous room for disagreement, and the burden of proof for resolving that disagreement was placed almost entirely on the Bureau. In most cases, where a large corporate interest disputed an agent's finding, the Bureau would lose. Whitfield saw this immediately. He documented it in a 40-page internal critique of the draft manual submitted in August of 1913, 2 months before the Revenue Act was signed. He requested a meeting with Commissioner Royal Cabell Thatcher to discuss the critique. He was given a 15-minute appointment. He was told the timeline for finalising the manual was fixed, and that the Bureau's position was that the language was adequate. He was then asked to sign the final document as Deputy Director of Administrative Procedure as part of the formal certification process that preceded the manual's official adoption. He refused. The refusal was not a dramatic scene. Whitfield did not storm out of anyone's office. He did not deliver a speech. He submitted a written notice to Commissioner Thatcher stating that he could not in good conscience certify the administrative soundness of the audit manual as written, and that he was formally requesting that his certification not be required as a condition of the document's adoption. Thatcher did not want a fight. The manual was adopted without Whitfield's signature, with a notation in the administrative record that the Deputy Director had submitted procedural objections and had been excused from the certification requirement. This notation was unusual. It was not the kind of thing that normally appeared in administrative adoption records, but it was also not the kind of thing that anyone outside the Bureau would ever look for or notice. What happened to Whitfield after this is instructive. He was not fired. He was not disciplined. He was, instead, very quietly and very efficiently sidelined. His portfolio was reorganized in the spring of 1914. He was given a new title, Senior Advisor for Administrative Review, that sounded substantial but carried no direct supervisory authority over anything consequential. His salary was maintained, but he was no longer in a position to influence the Bureau's procedural development in any meaningful way. He stayed anyway. He stayed for 11 more years until 1925, watching the audit manual he had refused to certify function in practice in precisely the ways he had predicted it would. He watched the provisions he had identified generate exactly the interpretive disputes he had anticipated, and he watched those disputes resolve consistently in favour of the challenging party. He kept notes. He kept all of his notes. Gerald Foss received Whitfield's letter in September of 1925, approximately 3 weeks before Whitfield died. Foss was 43 at the time, a specialist in American administrative history who had developed a quiet reputation as someone who could be trusted with materials that their owners did not want publicized immediately. The letter is not a polished document. It was written by a man who knew he was dying and who was, by the evidence of the handwriting, in considerable physical distress by the time he reached the later pages. Whitfield was not a polemicist. He wrote with great precision about specific provisions, specific decisions, and specific consequences, drawing his conclusions carefully and with evident awareness that he was making claims that would be difficult to verify and easy to dismiss. The core of the letter is an extended analysis of what Whitfield called the 3 decisions. By this he meant not legislative decisions, not votes in Congress, but the 3 specific administrative decisions made inside the Bureau between August and October of 1913 that determined the final shape of the audit manual. He names the individuals responsible for each decision and reconstructs the internal deliberations based on his direct participation in them, and he makes the case methodically that each of those three decisions reflected the influence of external interests on the Bureau's administrative process through mechanisms that were not illegal. I have to pause here for a second, because what I just described, that is one case from a much larger pattern. There are 35 documented cases in a document I put together. Different cities, different decades, different types of evidence. Every single one follows the same sequence: discovered, documented, acquired, disappeared. I could not fit all of it into a video. It's in the pinned comment below. Find it before we continue. But were deeply consequential and entirely invisible to the public. The first decision was the choice of outside legal counsel to review the draft manual's provisions on corporate income. Whitfield documents that the firm selected had represented, in the preceding 5 years, 7 of the 12 largest industrial holding companies in the country. He does not suggest this created a formal conflict of interest. He suggests that it created a structural orientation in the review process that made certain outcomes significantly more likely than others. The second decision was the timeline compression in the summer of 1913 that eliminated a planned 60-day public comment period. According to Whitfield, this happened not because of genuine administrative necessity, but because of political pressure from interests who had reviewed the draft and wanted it adopted before any organised opposition could coalesce around specific provisions. The third decision, the one Whitfield spends the most pages on, was the burden architecture in Section 7. The question was, which party would bear the burden of proof in a disputed audit finding involving complex corporate financial structures? The initial draft of Section 7 had placed that burden on the taxpayer. The final version placed it on the Bureau. Whitfield describes a specific meeting, attended by 7 people, at which this change was made. He names all 7. He writes, "The decision made in that room was not about administrative efficiency or legal clarity. It was about which class of taxpayer would find the new system navigable and which would not. The men who made it understood this perfectly. They made it anyway." To understand why Whitfield's concern about the burden architecture in Section 7 mattered, it is necessary to understand something about how federal tax audits actually worked in the early years of the income tax. The income tax, as established by the Revenue Act of 1913, applied to net income, not gross income. This meant that what was taxed was income after deductions for legitimate business expenses. For a wage earner receiving a paycheck, the calculation was relatively straightforward. For a large industrial corporation with complex intercompany transactions and depreciation schedules that could be constructed in multiple legitimate ways, the calculation was enormously complex. The Bureau's agents who examined these complex returns were, in most cases, trained accountants working with government resources. When they challenged a line item they believed was improperly deducted, the corporation being examined could respond by deploying teams of specialized attorneys and accountants whose entire professional practice was built around navigating exactly this kind of dispute. Under a burden architecture that placed the proof obligation on the taxpayer, this asymmetry was manageable. Under the burden architecture that the final 1913 audit manual established, the Bureau had to demonstrate that the deduction was illegitimate. It is the difference between a system that auditors can operate effectively and one in which the most sophisticated taxpayers have a structural advantage that scales directly with the complexity of their financial arrangements. Whitfield had seen this coming in 1910. He watched it operate for 11 years before his death. In his letter to Foss, he offers a specific estimate. In his judgment, based on direct observation of Bureau examination outcomes during the period 1914 to 1924, the effective tax rate paid by large corporate interests was, across that decade, between 30 and 40% lower than the nominal rates applied to their income. He attributes this gap not to evasion, not to anything illegal, but to the structural operation of the audit procedures he had opposed. He cannot prove this figure with precision, but he is an expert observer with 11 years of direct experience, and his estimate is a professional judgment. Gerald Foss kept the Whitfield letter in his private archive for more than 20 years. He did not publish it. He was uncertain what to do with it. It was not a political document in any simple sense. It was a dying man's attempt to put on record what he had witnessed, in the hope that someone, eventually, would find it useful. The archive passed, after Foss's death in 1951, to his former graduate student, a woman named Margaret Calloway Stern, who had by that point become a professor of economic history at the University of Michigan. Stern was the first person to attempt any systematic analysis of the Whitfield letter in an academic context. She included a brief discussion of it in a monograph on the administrative history of federal taxation published in 1958. The monograph did not attract wide attention, and Stern's discussion of Whitfield occupied only about 6 pages of a 200-page book. Those 6 pages were read very carefully by a researcher at the Treasury Department named Harold Dupont Mercer, who spent the following 4 years attempting to trace the administrative record of the audit manual's development. What he found, or more precisely what he found the absence of, disturbed him considerably. The internal deliberative records for the period August through October 1913 were substantially incomplete in the official archive. The records that existed were consistent with the broad outline of what Whitfield described. The records that would have confirmed or refuted his specific claims about the 3 decisions were, in many cases, simply not there. Mercer documented this finding in a Treasury memorandum in 1962. The memorandum was filed and, as far as can be determined, never acted upon. Whitfield anticipated this problem. He writes near the end of the document in handwriting that is by this point difficult to read, "I am aware that the most important meetings did not generate written records that were intended to survive. This was not carelessness. Men who understand what they are doing do not leave maps. There is a predictable objection to the story Whitfield tells, and it is worth addressing directly. The objection is this: the story requires believing that a significant institutional bias was built into the foundational administrative framework of American federal taxation through the deliberate choices of identifiable individuals, that this bias operated for decades with enormous economic consequences, and that almost none of this was recognized or discussed in the public record at the time. This seems, on its face, like a lot to believe, but consider what the alternative requires you to believe. It requires you to believe that the individuals who designed the administrative implementation of the income tax had no particular relationships with or obligations to the large financial and industrial interests most affected by that implementation. It requires you to believe that the choice of outside legal counsel, the timeline decisions, and the burden architecture in Section 7 were arrived at through a genuinely neutral process. It requires you to believe that Whitfield, a man who had spent his career inside the Bureau and who had no apparent political motive for invention, fabricated or grossly distorted what he described. None of these things are impossible, but set against them is a substantial body of historical context that makes Whitfield's account considerably more plausible than the clean institutional narrative. The period between 1900 and 1920 was one in which the interpenetration of large financial and industrial interests with federal regulatory institutions was, by the standards of any subsequent era, extraordinarily extensive. The revolving door between major law firms, investment banks, and federal departments was more pronounced in that period than it has been since, precisely because the administrative apparatus was still being built, and the people building it were, overwhelmingly, coming from the institutions being regulated. This is not a conspiracy theory. It is something more like structural capture, the shaping of administrative procedures by the professional backgrounds and assumptions of the people designing them, in ways that produce predictable distributional outcomes without requiring any explicit agreement. That is significant, not because it implies that someone was evil, but because it implies that the baseline from which a century of American tax administration developed was not neutral. The Whitfield letter itself is real. It exists in the Foss archive, held by the Columbia University Rare Book and Manuscript Library, accessible to researchers since 1987. It does not receive significant attention in mainstream histories of American taxation, which tend to focus on legislative rather than administrative history and find the evidentiary basis for Whitfield's specific claims difficult to assess, given the gaps in the official record that Mercer identified in 1962. The questions Whitfield raised, however, have not gone away. The scholarly literature on what economists and legal scholars call the complexity asymmetry in American tax law has grown substantially since the 1970s. This literature does not typically reference Whitfield. It approaches the phenomenon through economic analysis of audit outcomes and legal analysis of burden of proof doctrine. But its findings are, in their broad structure, consistent with what Whitfield described from inside the Bureau in 1913 and 1925. The specific provisions he identified in Section 7 were modified several times in the following decades. The burden architecture he objected to was partially reversed by the Tax Court Act of 1924. Further modifications came in 1939, in 1954, and in 1998, when Congress shifted certain burden of proof requirements toward the taxpayer in cases meeting specific criteria. Whether the structural asymmetries Whitfield identified have been substantially addressed or merely replaced by more sophisticated mechanisms remains genuinely contested. Whitfield knew he was not offering proof in any legal sense. Near the beginning of the letter he writes, "I am not giving you proof. I have no proof in the legal sense. What I am giving you is a witness account from inside the process of what I saw and what I understood it to mean. Whether that is useful to you or to anyone who comes after you, I cannot say. I only know that it is true and that I would rather have it on record, imperfect and incomplete as it is, than take it with me. Royce Alderman Whitfield died on October 11, 1925 at Georgetown University Hospital. He was 54 years old. His death notice appeared in the Washington Post in 4 lines, identifying him as a long-serving federal administrator. The Columbia University archive contains one photograph of him, taken sometime in the early 1910s, showing a thin man in a 3-piece suit with an expression that suggests he is thinking very hard about something or is mildly annoyed at having his photograph taken. Both interpretations are probably correct. The 41-page letter he wrote to Gerald Foss in the summer of 1925 remains the primary source for the account given in this documentary. It is a remarkable document, not because it resolves anything, but because it demonstrates what an informed insider who had no career left to protect was willing to say about the institutional history he had lived through. It is the kind of document that tends not to exist because the people who know enough to produce it also have enough to lose by producing it. The history of the 1913 Audit Manual is, in the end, a history about the gap between what institutions say they are doing and what the mechanics of their operation actually produce. Whitfield did not close that gap. He was one man occupying a peripheral position, watching processes he could no longer influence. What he did was look at the gap clearly, describe it carefully, and then, because he was dying and had nothing left to protect, and felt that someone ought to say it, he wrote it down. The administrative machinery that Whitfield refused to certify in 1913 is still operating, modified, layered over, reformed in pieces, but built on the foundations laid in those 8 months between February and October of that year, in those rooms by those men. Whitfield thought those foundations were crooked. He said so in 1913. He said so again in 1925, when saying it cost him nothing. The official record treated his objection both times as a procedural notation. This has been the story of the last man who said no, and the letter he left behind. The letter is in a library in New York. It has been there since 1987. It is waiting. There is a version of history that gets told in official documents, and there is a version carried by individuals who were inside the rooms where the decisions were made, who watched things happen that were never recorded, and who mostly took what they knew with them when they left. Whitfield was unusual because he did not. He was a methodical man who believed in documentation, even when that documentation was his own testimony against institutions that had sidelined him for a decade. He did not expect his letter to change anything. He said as much to Foss. He just thought the record ought to contain it. The record does. Most people will never read it. If you want to keep going deeper into economic and administrative history that does not make it into textbooks, subscribe. Every week, a story that the official record filed and forgot. Click the video on screen now.